are live, doing a quick stream check on X, on LinkedIn, and then we will begin. We have the legendary Julian Kwan in the house to talk about all things tokenization of real world assets. Let's make sure that we're live properly. Let's see that. Okay, I'm just not seeing the stream go live.
Yeah, let me know if I can help with anything.
It says we're streaming, but I don't see anything on X or on LinkedIn, which is more important. Okay, so we're streaming on LinkedIn. It looks good. The stream is up. Everyone's tuning in from all over the world. We have 60,000 listeners so far. Thank you to Elon Musk and Jeff Bezos for taking time out of your day to listen to us chat. I have the privilege of being joined by Julian Kwan, the CEO, co-founder of Investax and IXSwap. We'll get into just what these two brands mean in a minute. But first, Julian, how are you this fine Monday? April Fool's Day. We're no fools because if you would have told me 2 years ago, 3 years ago that we would be sitting here discussing BlackRock and their entrance into real world asset tokenization and $70,000 Bitcoin and ETFs, maybe we would have thought that was April Fool's, right? Like 3 years, 4 years ago. Who would have thought? So I'm curious, where did you get your start, your journey? What would the road look like for Julian to get to this point in 2024 with, if I'm not mistaken, yours is one of the only automated market maker based exchanges for real world assets, for securities. So thank you for joining us, and maybe give us a brief introduction. So just kind of get us on the right footing.
Yeah, thanks, David. And thanks to everyone who's listening in. We've obviously had kind of an explosion of interest in the RWA, real world asset tokenization space. My name is Julian Kwan. I'm co-founder CEO of Investax and IXSwap, two platforms focused on the RWA space. Our team was essentially the first builders in Asia focusing on RWA back in 2018. So the beginning of the industry was 2017-18. We had the ICO boom and then the ICO meltdown. We had the very first STOs, which kind of ironically were being tagged or coined that term by the regulators. Actually, these look like security tokens. Somehow that caught on. We had the STO, the beginnings of that market. So in 2018, it really began. For those that are just hearing about it recently, it used to be called security token offering, tokenized securities. At one point, digital securities was the main terminology. So it has had a couple of rebrandings of name, but essentially it's the same thing. There has been evolutions in terms of products being offered, what you can do with these products, the different types of products out there, and just maturation of the industry and infrastructure. So in we started back in 2018. Investax used to be one of the first real estate investment platforms, and after doing about 40-50 deals, we put money into like private equity, debt and equity, preferred equity, common equity, senior debt, mezz debt, bigger development real estate projects around the world, and it went pretty well. But we realized that first generation of online investment platforms, which kind of started late, I guess, 2020, 2010, 2012, 2014, you started seeing the very first equity crowdfunding platforms. You saw the first P2P lending, might have been earlier than that, first real estate crowdfunding platforms. And that first generation of platforms is actually quite low technology. So behind the website, you go in to invest and there's lots of pieces of paper, nothing much had changed. It certainly changed the access. So you are now starting to see people investing in real sums of money online. People used to think I was crazy starting this platform up many years ago. InvestX started in 2015. But I just thought, it's more convenient, so people will use it and go on to the days of that mindset that no one would trust email and internet to send value. And so on that journey, we had a broker-dealer license at InvestX. We added an exchange license. We brought out one of the first real-world asset issuance and trading platforms. And it operates like a software-as-a-service model. So anyone who wants to issue a real-world asset, commodity, real estate, private equity, startup, venture, private credit, whatever, can have a section of the platform, leverage the wallets, the payment systems, the tokens. And that's been, the beginning of the journey. In 2021, we, with some partners, we conceived IXSwap. IXSwap came about because from 2018 to 2021, everyone was talking about real world assets and liquidity for these liquid assets, but there wasn't any. So most people weren't really aware, but it was just the very first time broker dealers were adding the token technology. It was the very first security token exchanges in the world. There still wasn't any market making. So we looked at the innovations in DeFi, made famous. The AMM model, the automated market making model, was made famous by some platforms like Uniswap and then Pancake and SushiSwap. Essentially, it brought a liquidity solution to the decentralized exchanges. And most people also don't know that. I think now DEXs, as they're well known, the volume of trading on DEXs has grown dramatically in the last 4 or 5 years. But the only reason that happened is because of the development of the AMM, the automated market maker, where essentially, in simplicity, anyone with 2 crypto can start a liquidity pool. Anyone with those crypto can join that pool. Market making fees are then shared with everyone providing liquidity. So essentially, it's crowdsourced market making. And then when you come to the front of the DEX, you can buy and sell, and there's actually some form of liquidity. There's a slightly different UX UI. It's more simple than, say, a centralized exchange, where there's no order book and matching engines. There's not all these different prices. There's just a take it or leave it. You want to buy token A, it's 0.5 or 2.5 of token B, yes or no, right? So the reason I bring it up is because we positioned IXSwap as like the Uniswap for RWA, where we believe in tokenization of all assets. It's a better system. It's more efficient. Governments would want it. Investors would want it. Issuers would want it. It's inevitable. But so in that world, when you go from 10 to 100 to 10,000 to 1 million RWA, the super majority of those assets, your startup, my real estate, they all want trading, but they're not exchange traded products. They're not big enough. There's never going to be a market maker like you'd find in a traditional stock exchange or even in a cryptocurrency market exchange. It just meant that the super majority of these assets are never going to have a market maker. Now, in 2018, the super majority of altcoins sat on DEXs with no liquidity. So had the same until this system came into place. So we then said, all right, if the super majority of RWA are going to want trading, but they're not going to get any, why don't we try and build this model that allows anyone with an RWA and a token, crypto, whatever their price, the asset's priced in, let them start pulling themselves and do it fast and do it cheap and make it available to kind of every asset. So that was a bit long-winded, but I think it's important to kind of start off with like how do we get
yeah,
here?
that's amazing. I mean, I was around, in Israel when AMMs first got their start at Bancor. So that was like the initial AMM, bonding curve based exchange. And what Bancor didn't do that Uniswap did, and like I spent a lot of time thinking what created Uniswap's, immense growth, even though they weren't first mover, they were second or third mover.
That's right.
And the difference over there is that Uniswap, Bancor's back in the day allowed you, and this is, I think, is something about AMM based for RWA that excites me. Like, yes, bootstrapping liquidity for projects is cool, but what is even cooler than that, what is even more impactful, is the ability to give, myself, a retail guy, the option to be a market maker and earn some of those fees.
Yeah.
So, I remember in the early days of Uniswap, and what Uniswap did right, that they allowed you to create pools with any token. whereas Bancor, you needed BNT, their token, to create that pool. So
Right.
when Uniswap did that, you just saw an explosion of tokens. I remember DeFi Summer 2020, like, you could make really good money being an LP for DeFi tokens and ETH. So why Yearn Finance at the time, or Curve, or Compound, or any of those tokens. So I think the future will hold something similar for real world asset based tokens as well, real estate, or tokenized stocks, or tokenized bonds, where if you have them and you wanted to sit passively, you can put them in the LP, put them in the liquidity pool, and earn those fees. So I'm curious to see, like, now that IXSwap's been around for a while, and as more real world asset come onto the market, you're obviously going to fill up that, your page, the scroll is going to get longer on IXSwap. So I'm curious, like, what is the vision for the next 3 years? And especially around, what asset types that you would like to see on the platform, and just kind of what direction is this intersection of DeFi and real world asset taking?
Yeah, good questions. Well, I think it's important to sort of share with, I guess, the audience that, let's call it the last 12 months. What most people know about RWA in the last 12 months has really been the tokenization of, like, financial instruments, tokenized treasuries, tokenized money market funds. The reason that happened was because after, all the bad guys, SBF, Do Kwon, 3AC, huge meltdown in 2022, there's hundreds of billions of dollars of stable coins sitting around earning zero yield. So people started looking back to the TradFi, traditional finance markets, and saying, well, these guys don't want to come out of fiat. What could we possibly give? And there's no yield in DeFi. There's a complete bear market. What could we give them where we could make money, where they could stay in their stablecoin? So people started then tokenizing treasuries and money market funds, and said you could put your $100 million of USDT or USDC into this product, earn 5 or 6%, and then get your stablecoins back. So that's one of the reasons why RWA surged in the last 12 months. And it's the reason why most of crypto and DeFi, why we're even having this conversation now. When we started years ago, people really just wanted to do real world assets like real estate, startups, but the quality was very, very low. That was one of the big issues. But a lot of people weren't really issuing real world asset tokens. They were saying they're issuing these tokens, or you can have it on a piece of paper, or we're sort of going to do it, or once we get the funding, we'll do it, or we'll choose the protocol later. And the evolution of the space and what the RWA movement happened, which is, again, 12, 18 months ago, where the industry basically rebranded the security token offering. But one of the key elements to it was people were really issuing real world asset tokens on public chains. And therefore, it was like the real use case. And I think we talked about it just briefly. I think public chains, both the private chains, and we've been building on public chains since the beginning of time, at least for us. We thought that's where Bitcoin is, that's where ETH is, 10,000 alts, NFTs, stable coins, DeFi, anything that you can name in a digital asset of the last 5 to 10 years that matters is not sitting on someone's private chain. Where are all the developers? Where are all the engineers? And what's the point of issuing on your own private chain? You may as well just, essentially it's just a database of your own, who cares? If you're on public chains, your assets are able to directly interact with the billions and then trillions of dollars of other digital assets. So that's how, we built our thesis way back. And what it's meant is that we're now starting to see evolution of all the products. So what I think, but what's also interesting is that these recent products are not appealing to the degen crypto community by the super majority of them. What I mean by that, these crypto investors, they want crazy returns. The meme coins are a great signal that they want a bit of the casino. Sure, some of them want some real world asset tokens, but they're not interested in a 5% annual return. So what was really interesting, again, in the last period of time was we had a lot of RWA platforms launching. There's a new one every day right now. Most of them have got no licenses. Some of them don't need them, but most of them do. they've launched these utility tokens, right? So you got the whole of the crypto community yelling and screaming about how great these utility tokens are. The irony is that they haven't even tried to buy the real world asset tokens because they're not interested in them. So the other side of it is quite interesting. The crypto hedge funds, the family offices, the bigger investors, they're the actual ones buying these tokenized treasuries because they're okay with a 5% yield. So the guys buying these RWA are not even generally wanting to hold the altcoins, or not even willing. The guys buying the utility tokens can't even buy the real world assets. So that type of product has got its own issues, but it's very valuable to the ecosystem, but it's not very interesting, right? But so what I think happening right now is much more interesting products. And I mean interesting on many levels. I mean by return profile, by risk return, by type of asset, starting to come to market. So we've always been asset agnostic. We'll look to help anyone that's legitimate launch their RWAs. What we've been doing, and what's different about IXSwap is, yes, we have our own native token IXS. It's a utility token that has a bunch of different features on the platform, but we went and got retail securities licenses so everyone can invest. You just have to have a photo ID. You don't have to be a high net worth, accredited and sophisticated investor. And we've made the investments one USDT, one USDC, right? So on our platform, whoever you are, you can actually go and buy these real world assets. And we've spent the best part of 12, 18 months developing products that we think appeal to the crypto community. And I don't mean the crypto hedge funds. I mean, everyone is listening to this, buying $10 of IXS, shilling meme coins, the army, right? The community, our fantastic community that we have on our channels. So we've started these latest products called on-chain tokenized portfolios. And essentially, it's like a tokenized fund, for lack of better words, but they're led by key opinion leaders and influencers in crypto space. So the recent one that's going up now, that'll probably close this week, Coach K, he's a crypto trader. He's been doing it for 10 years. He's in collaboration with us. We've got this vehicle that you can go on to IXSwap today. You can put in one USDT and you can own one real world asset. And he's going to go out and invest in all these gaming companies and gaming tokens and private sales. And at the end of the period, he sends back the profits and they go back into the investors. The other exciting part about that is that because we have this AMM model, immediately after funding, there's a liquidity pool. So if you think about the concept of a venture capital fund in the traditional world, the time to exit is usually 14 to 17 years. Now, they never say that because they'd never raise any money at the beginning if they told people it's a 17-year hold. So they promote 7 to 10 years, but the reality is it's much, much, much longer. So we've now taken the concept of VC funds and we've shrunk it into set it up week versus months. We've shrunk the cost by 95%. And then the day after it's funded, there's trading. So essentially, there's liquidity optionality day 8 versus year 12, year 15. So I think startups is another really exciting place. I've always thought that RWA would really help crypto. And I said that many years ago because it's a great use case. And if you're a platform launching DeFi, web, gaming, whatever, if you actually have a real world asset token that represents equity, and then you actually have a utility token, it'll be much easier to justify to any regulators that this truly is a utility token, because if you want the equity token, it's over here, and that actually serves equity. So I thought this would be, a whole new use case. They would help each other. And I think that what we're seeing coming out now is absolute kind of across all industries. Some TradFi products, commodities guys are going for it. Carbon credit guys are going for it. That is or isn't a security depending on your area of the world. You've got real world assets that aren't really investment products, like like artwork and tokenized, treasuries and collectibles. If you get to cars and stuff like that, but then you have a lot more like serious investment products like private credit, private debt. 12, 15, 18% returns, short-term products. There's a couple of products on a platform like that. So yeah, it's a very, very diverse range. But I think that what's important is that you want to be, you want your RWA, if you're planning on launching one, to be multiple times better than the paper version. Otherwise, honestly, no one cares, right? So people used to come and say, let's do real estate. It's a great real estate project. Oh, it's 4%. I mean, the public REIT down the street pays 6%. So, and that is liquid. And it's open, 9 to 5, Monday to Friday. But you're promising liquidity, which isn't there, and your returns half. Like, at the end of the day, with real world assets, people are getting the actual return of the RWA that they're meant to get the return of the RWA as one of the most important things. And I say it's one of the most important things because what we're now finding is that when people tokenize real world assets, they put them on like swap, they start these liquidity pools. The actual value of the tokens dramatically increases. Very similar to sort of ICOs and crypto on AMMs. When many more eyeballs can get to it, people start to get excited by it, it trades multiple times higher. And as you would know, crypto trading and crypto valuations aren't necessarily tied to anything specific in terms of a real world asset. So they trade as to what the market deems that the value is. And so we've been really focused on launching RWA like crypto, like ICOs, having the same kind of marketing, having the same excitement around that in terms of the right types of KOLs and influencers involved. And we're also bringing out some new things that have never been done before. Like if you stake our IXS token, we're going to airdrop RWA equity tokens on you, which never been happened before, which actually helps our token, but also because we're actually able to do that. But again, those are the innovations and the exciting almost gamification concepts coming out of crypto. And that's what I think the winning projects and platforms are. I don't think the winning at the end of the day, probably winning is the wrong word. What I'm excited by. You said, so what am I excited about? I'm not excited by tokenizing treasuries. I personally don't care. I don't think that's interesting. I think the TradFi guys will swamp that market. But again, it's valuable and interesting. I want to put out products that both markets have never seen before and offer that up to everyone and make it as easy and accessible as buying and selling cryptocurrency for every person on the planet, which has been a big mission of the platform since day one.
Yeah, I 100% agree with the idea that tokenized real world assets should borrow from the good things from crypto by leaving aside the bad things, the scams, the rug pulls, the regulatory cowboyness, but just take the community, take the gamification, take the virality that is so inherent in crypto and bring it to assets with underlying cash flows, assets that have some basis in the real world. But I'm really curious as to your, you mentioned a good point about a dual token model where you have a project with a utility token and then they also issue a token representing equity in the company as well. Yeah. Now that is obviously, it makes a lot of sense. I think, if I'm not mistaken, you guys have IXS and you also perhaps have an equity token as well. If I'm not mistaken,
have one yet for our
we don't have an.
Yeah, not just yet. We will at one point.
So what is stopping more companies? Because I know maybe 2 or 3 companies that have a utility token and equity token as well. And when I speak to founders about tokenization, real world asset tokenization, the most common refrain that I hear is, no, we already have a token, we don't need you.
Yeah.
To which, I don't even have a time to reply. You can create a dual token model. You can have your governance token for DAO voting. You can, do all these things on platform with your utility token. But in addition to that, you can, instead of going to a VC round, you can raise a new fresh round, or even just, you don't need to raise any new capital. You can just take your existing cap table and ask whoever wants to tokenize, and then you have the 24/7 liquidity. So it makes sense. Something that makes so much sense, that has so many upsides. What's the barrier between, conceptually making sense to a widespread application with hundreds, thousands of equity tokens trading on the market?
Yeah, a lot to unpack there. First of all, you need to, if you're going to tokenize companies, you need to get in early, right? Because a traditional startup, I say traditional, a paper-based, normal startup, don't talk about blockchain. If it's had multiple funding rounds, seed round, Series A, B, C, D, there's all these different contracts. Everyone gets a different deal. There's side letters. There's all this fun and games, and that's just the way it is. So when you try to come in at Series E and tokenize that offering, it's very, very, very complicated, if not impossible a lot of the time. So what we focus on is early stage, seed, SAFT, just very early stage. You can create then with a clean slate a tokenized vehicle that makes a lot of sense, that works for both the company and the investors, and also build in mechanisms to protect or be flexible for later round funding, right? Whether, I don't know, it's an IPO and we need to be able to get all these token holders back and all that kind of stuff. So it's got to be early. The other thing that's really interesting is you need Web3 companies to start moving on this because they get it from a technology perspective. One of the reasons the bottlenecks has been infrastructure. I mean, again, in 2018, there was no licensed real world asset platforms in the world. Maybe there was one or two, that was it, right? There were no custodians. There were no exchanges, maybe teaser in the US, but they've done a pretty average job. But if you fast forward to today, there's 10 custodians, there's 10 exchanges. And again, if you go forward in another 4 or 5 years, it'd be 100, right? So the infrastructure wasn't there way back in the day, but now it's here. The third point is retail investor access for everyone. That has been missing, full stop. That's why we went 3 years ago, applied for licenses. We saw that coming out of the pipeline. If you really want to get excitement and scale, everyone needs to be able to buy, right? So that's, again, all these things are being solved, but it has taken some time. And I think ultimately the fourth part's the community. So everyone's I'm going to say everyone, a big part of the crypto community isn't very happy with the concept that if they're not a VC, if they're not an influencer, they get a chance at a very small slice of a public sale, and that's 20x higher price than what the early guys got into. All right. There's elements of that we're fixing by building, LBPs, liquidity bootstrapping pools. That information isn't out yet, but I'll let that slip. But more importantly, like, people need to vote with their feet, right? Like, if all the crypto community thinks that the token holds the only value, why is A16 said and 20 other VCs sitting on the equity side of the cap table? All these protocols, I'm going to say all, a super majority of these platforms, whatever it is, Web3, gaming, DPIN, RWAs, they're businesses. And there's investors who own equity in those businesses who also get all these special token terms. And again, 100% of the value of what's created does not just sit in the tokens. So one of the positions we've taken for a couple of years now is, like, if you're a startup founder, do you want $1 million from David, and he's one guy and he's a VC and he tells you he's going to give you heaps of love and help you and open all these doors? Most of the times it's not even true. Sometimes there's the occasional good VC out there, but there's a lot of talk. They just want the best deal for themselves. It's just generally how the world works. Or, and I'm not saying David's not needed, but do you want David then? Why doesn't he put in $100,000? You still want professional investors, due diligence, negotiate terms, contracts. And then why don't you do a $900,000 raise to the whole community in RWAs? And would you rather have 900,000 users of your platform with one RWA each, or just one VC? So if you think about building longevity and value from a platform perspective for the platform as well as the users, if you start to give people real ownership instead of just the tokens in terms of the utility tokens, I think you'll have much more successful businesses. Everyone will be thinking much more long-term. They won't come in and just try and pump and dump the ICO because they're real investors. So again, I think that you need to be early. You need to have retail access. You need to structure cleanly, and you need to still work with professional, venture capital type investors. But you want to open that up to the rest of the community, and it takes time. I mean, our current deal now has, I think, almost 300% more investors in it than the last one, like 3 times as much. And that just continues to grow. So I think ultimately, they're the key elements that see more scalability with, really companies and startups. Although at the same time, more and more, and as the cost to execute comes down, just like most things with technology gets cheaper, it becomes more and more affordable and more attractive for all different types of issuers to issue. Because that certainly was another problem over the last couple of years, where infrastructure platforms, not ours, big ones around the world, were just charging insane fees for people to tokenize stuff without any track record or any, a lot of promise, but no evidence of these value propositions,
Yeah, I mean, I resonate with what you said regarding investing in startups as a having multiple investors instead of one big VC. I got in the space for RCO days, and that's when I was lured in by the promise of investing in early stage startups, when investing in RCOs was not that. Investing in RCOs was a speculative gamble on a utility token that might be created or might not be created, that might have a value on the network or not. But I didn't have any line in the cap table of the company. I didn't have any claims on the cash flow. Real world asset tokenization, equity tokenization of startups, it turns that on its head, and it really introduces a potential for retail investors to get in at Series A, Series B, whereas before they had to wait for companies to IPO at $1 billion valuation.
Yeah, that's the other
thing. A slice of a pie.
100%, and that's the other challenge. Like the only time retailers have really been allowed to invest in doing startups is once all the rich and wealthy people at all the different levels of seed and series and all that kind of stuff, then they IPO, pay huge fees to the investment banks, and then you're buying it at 200x what it started out with. That's the only shot, right? And the system has been built against the smaller investors because they've considered that makes that investment safe. Well, you could look at it in a different light and say, once all the value's been sucked out of it, or a lot of the value's been sucked out of it, we'll give it to the guys who've got smaller money, because that's just that's a lot of how the world works. So yeah, real world asset tokenization for startups builds much better, stronger communities that are dedicated to helping you. It truly rewards the users. And again, I don't say VC is not needed or can't add value, but I certainly know that you would have a better outcome with 1 million equity holders than you would with one, especially if the purpose of the platform is to serve those millions of people where it's actually usable, right? But again, that'll be a world of, have your governance token, have your NFT, have your equity reward asset token, combining all those together. That's what we're going to see. We're going to see a much more digitized, let's call it ownership, whether it's equity or not, tying it together and rewarding those users around that to create more and more value for sort of both sides. So I think that the future of Web3 startups, at least, I don't know about traditional startups that aren't in blockchain, is definitely the RWA plus ICO plus NFT. And that's sort of the one area that we're focusing on a lot right now.
Cool. I want to get to some challenges, like what's standing in our way. I mean, when it comes to ICOs, NFTs, the whole crypto side, regulation is sort of an afterthought. It's just something, you get an opinion letter. This is not a security, and you go ahead, airdrop or token generation event, whatever. But with real world assets, different. Regulation becomes a lot more of a main concern. So how do you view regulation? I know you're based out of Singapore, and I'm also curious as to what the regulation is specifically in your area of the world and in general. Just how do you navigate this complex, sometimes fiery waters of regulation?
You mean in relation to RWA or ICOs, or?
I guess both. If you're asking, like, just your general outlook. Yeah.
So we hold several licenses. It's expensive. It's quite painful. Lots of hoops to jump through. Lots of reporting on a weekly basis. But necessary, right? Necessary to do these things. So my team's trying to dramatically 10x the concept of investing in startups, investing in real estate, investing in these other things by using these technologies and making sure that we're staying within the boundaries of compliance. I'm not saying regulation should be toned down, but again, I'm not a regulation warrior. I'm like a business person, and I want to try and build world first amazing products. The regulation for securities is a bit wacky, right? Where you are, where your asset is, who you speak to, who can buy, who can read this, who can access even the information, how much they can invest, what age they have to be, what they have to be able to invest. I just threw off without even thinking about it, right? These are many of the considerations, or at least the parameters, that are required to consider when you're launching an RWA or investing in one. So, and it depends in which country. So there's a bit of a minefield out there. We chose jurisdictions that were open to innovation, right? And not there's a few regulators around the world. They've created like these sandbox programs where like it's a new model, but it sort of still needs what the old licensing, because people forget there's no way the regulations can't keep up with technology, right? Like technology is years ahead of the regulation, which is one of the problems, but it is what it is, right? So securities regulations are quite clear. We don't need new rules for RWA. We could certainly have adjustments to them. But if an RWA is deemed a security, go and issue and trade and buy and sell on a broker-dealer exchange and a custodian that is allowed to hold security real-world asset tokens, right? So securities is actually a lot easier to cover because that was it. We don't need new laws. Crypto certainly has, blown the world apart in terms for many reasons, but in a lot of jurisdictions, so finally, again, people forget it's 16 years, I think, since Bitcoin white paper. We finally got the ETF, right? So finally, and America has taken a very poor approach to regulating crypto. And I mean poor as in you stifled and damaged the industry. That fight will lose. Crypto will win. It's inevitable. But meanwhile, for years, startups are destroyed, chasing people around, letting Coinbase list and then telling them that crypto's illegal securities, like after you've approved their public listing, stories go on and on. Outside America, and again, America's getting better. The Bitcoin ETFs is a big one. It's kind of signaled that at least the big king of the market is not a security. Hopefully Ethereum, and hopefully it moves forward down. And again, the more and more RWAs that get issued, the more obvious that a lot of these cryptos are not equity tokens and debt tokens. They're crypto, ICO, governance, collectibles, whatever, because you'll be able to compare them to what an equity token is, which gets 8% yield or 12% returns or whatever the actual play is. But outside America, the rest of the world's embracing it. I think Asia is very bullish on both cryptocurrency and RWA. Korea, I was just up there. Japan made the rules clear a while ago. November last year, I think Hong Kong said, all right, we're good for these RWAs now. And there's cryptos allowed as well. Singapore's been super pro RWA since day one. I called the regulator in 2018 and said, I want to do these security tokens. What do I need to do? And they said, is it a security? I said, yeah, it's a security token. They said, well, follow your license, and hung up the phone. So that was that was how these guys dealt with it, because that was a smart way to deal with it. And then Europe, I think, and UAE is obviously all over the space now in terms of positively trying to win the business and positive regulation, I would say. I mean, I'm just going to keep it very simple today. Some people who've applied for license there might argue with me that that's not true. But and then you've got Europe kind of doing its own thing. And it sounds like they're making up some pretty silly rules like the US has done as well. That's not going to help anyone long term. But look, ultimately, there's plenty of places around the world that you can legitimately invest, issue, trade either ICOs or real assets. And I think one by one, the governments that are holding out or fighting the longest, they're typically the developed markets. In America, it's many ulterior motives, trying to hold on to the US dollar and the control over the world markets as long as possible. And Bitcoin doesn't even work very well as a payment system yet. So, but let's try and take it down because it looks like it's attacking us. But yeah, ultimately, evolution 2024, many great places. And I'm obviously sitting in Asia. I've been here for many, many years, 2 decades. But I think Asia is going to be a powerhouse for RWA, and I think it's going to continue to be a powerhouse for crypto.
Yeah, I mean, I was in Korea last year in for Korea Blockchain Week, and there was a lot of appetite for RWA, for tokenization. I mean, at the time there was a few partnerships with banks were announced, and a few of the big players were interested, but the appetite for gaming and for all the social fi applications was just wild, and like that's they live and breathe innovation there, and I think that's very pertinent to regulation discussion, because the idea of, you know, a security versus a commodity, the SEC versus the CFTC, that's very pre Satoshi. Like we have so many different classifications of assets, and every single Monday and Thursday new ones start to pop up. So you have you know, a governance token that you can vote with on a DAO, and then you add a staking mechanism, which adds, you know, a different factor, like some sort of yield, you can call it, or revenue stream. Then you add a mint and burn, and then you add, so you have all these sort of characteristics and functionalities. Some of them are very security like you got to admit that something like staking or mint and burn is very similar to share buybacks, you know, in the equity side. But some of them, like voting in the DAO, or like using it to buy a game item or whatever, that's more like airline miles, or more like tickets, voting tickets. And you know, you've got all these characteristics sometimes in one token. How do you define that? And I think, you know, some jurisdictions have come out ahead of the game and said, okay, if it's an investment contract very strictly defined, then we'll go on the security side under securities law. Otherwise, it's on the crypto side, something like Switzerland. And to your point about the US, I think, you know, the US taking, it's ironic because, you know, for a long time I thought the US isn't embracing digital assets here, like crypto, Bitcoin, because of the potential threat to the dollar. But now I think that, you know, if the US had to embrace Bitcoin, that would create, you know, that's if the dollar needs something to really give it a boost as a reserve asset of the world, it's to have some sort of Bitcoin reserve backing that USD, like go back to some form of quasi gold standard. Only the real, you know, evolved gold 2.0, which is Bitcoin, that would give a lot of, you know, strength and legitimacy
I think
to the dollar. So
I think also, like, as you said, there's a lot of competing regulators in somewhere like America, just even confused between themselves, right? Forgetting the actual topic here. But then again, I think, you know, at least in the Asian market, people are much more pragmatic. I mean, if you said to the average, this might have changed, but, you know, over the years, speak to anyone, but generally older people, I'm talking older in this case being 60, 70 years old, talk about Bitcoin, and the first response is, can you make money? You know, and if you can, cool, where can I buy it? You know, but if you go to, if I was back in Australia or I was in America, you'd ask the same age people that question, and they're like, what, you know, what is that? Is that legal? Like, you know, I don't know about that. So, you know, you're on the front foot straight away out here, because I don't know, people are just, I don't know, I guess more pragmatic or just interested in it as well. But yeah, look, ultimately, cat's out of the bag now. So now what's interesting with the regulators is, again, ex-America, regulators have now really got to compete much more closely for business, right? Money goes where it's best treated. If I can get a license in Hong Kong, it's 10 times better than Singapore, then I go to Hong Kong. If I can go to the UAE and get 0% tax, get a license to run stuff, I'm oversimplifying it, but just to make the point, I'm going to go to the UAE, right? So now the UAE is now a huge competitor, at least specifically for blockchain, against Hong Kong and Singapore. And when Hong Kong, if you go back not very long, I can't remember the dates, maybe a year, maybe a bit longer, Hong Kong was anti-everything tech, anti-crypto, anti-blockchain. Because of that, Singapore was pumping, rents doubled, everyone was down here, all the crypto guys were down here, it was just dead. And then China, Xi Jinping changed his mind and said, crypto in Hong Kong is good, real world assets is good, let's do that. And that revived kind of the whole market. And everyone went, all right, we're back on here. Huge thing, right? A lot of people moved back, and talk even just in the blockchain space. And then over the last year or two, we've had the next player come to market and really start making a lot of noise, which is the UAE, Dubai, Abu Dhabi, you know, VARA licenses, Sandbox, with their own value proposition. So it's really great, actually, in the blockchain space, decentralized teams, predominantly everything's online. You could be anywhere per se. it really has changed the game there. So it's, it's a good thing when regulators wake up and they want to make money and they want to bring businesses and they want people to hire people and pay taxes and rent and buy apartments and pay for $20 beers or whatever it is. So yeah, so that's the other thing as well. Like if you're not, again, America or maybe even the EU, like the rest of the world's like racing to try to make it happen and build frameworks that are good enough so people are willing to spend their lives building in this space and becoming startups and hopefully building really valuable businesses that add a lot of value to themselves, but also around to the locality that they're in.
Yeah, it's it's definitely a first mover advantage for the forward-thinking regulators, and Dubai especially is a massive success story. I just realized that you mentioned Singapore and we mentioned Switzerland as well. There's a very strong correlation between the most expensive cities in the world and the places where crypto is booming. So Singapore, you guys are number one, equal with Zurich, also big crypto city. Tel Aviv over here, we're number 8 in the most expensive cities in the world. And Israel's case is a very interesting one because we have some of the best cryptographic minds in the world over here. We have a very high concentration of entrepreneurs, of developers, but the regulations, for whatever reason, still hasn't caught up. And instead of encouraging innovation in Web3, regulators, banks, and they now actually, it's funny enough that I say this because the tax authority came out with a special announcement about 2 weeks ago saying, if you come forward and declare your taxes, willfully and from previous years and, retroactively, and we won't penalize you. Now that there's a bull market, everyone wants to get, their share of the pie. But, the real winners are the ones that have consistently, systematically been building towards becoming hubs of innovation through the bull and through the bear. And, whether it's in blockchain or AI or all these new industries popping up that require us to rethink, what does IP law look like? What does securities law look like? What does copyright law look like? And those that are putting the frameworks in place to succeed are the ones that are setting themselves up for wild 21st century beyond the So we're getting to the sort of the end of our show. Julian, thank you so much for all your expertise, and I was I had my mind blown in a few places, so I'll have to spend some time picking about the pieces, problem. Especially around I think what's the most interesting to me is the integration between DeFi and real world assets, kind of using the primitives. DeFi is very powerful in terms of the primitives that we've constructed over there, whether it's the ability to mint collateralized stable coins or automated market makers or lending pools where you can diversify risk by having multiple lenders and multiple borrowers interacting with each other. However, the problem I always saw with DeFi was that DeFi was based a lot on synthetic assets. So you would have Curve, which takes 3 stable coins in a pool, and then you have a wrapped version of that, and then you take the wrapped version and you create a staked ETH. There's all these synthetics on synthetics, and you don't understand that if you take out the base layer and everything will collapse. There isn't any real cash flow coming in from real business activity, from valuable from action.
And you hit it on the head, and that's why we had these massive DeFi meltdowns. When you stake a token to get more of a token and wrap that same token and token the same token, then you have a house of cards. Like you need, once real world assets become a mainstay and a plug, real building block, which they're becoming now, of DeFi, it's going to dramatically help the whole DeFi space. So I read a paper a couple of years ago, and it basically said, DeFi meltdown 21, 22. Like when we start using real assets, we'll alleviate a lot of these problems. And I tracked down the person who wrote it. And I said, what are you guys building? Where are you doing it? And they said, I'm a research analyst. I live on an island in Greece. I work for Copper, the big crypto custody. I said, what's Copper doing here? They said, nothing. I just get paid to come up with ideas. And I said, this is bang on. Like, this is the idea. lending, borrowing, staking, real world assets, and then start thinking about my startup share or your VC fund. I can take my VC funds, David's VC fund tokens, and go and lend and borrow on it. That's 10x better than sitting around waiting 17 years. So I can take a paper share, invest, put it in my drawer, do nothing. That's literally the level of excitement for most private market assets. Now we get a real world asset token. We can stake it to earn rewards. We could put it in an AMM and get share in market making fees. I could lend, borrow, use it collateral. It's more than 10x better. It's 100x better. And we were just scratching the surface. And if people can pull their heads out of their ass and stop thinking, if I tokenize anything, I get free money like it's crypto, and start thinking about when I can bring high quality assets that can then go and do all these things, I'm going to have the best real estate fund in the world. I'm going to have the best VC fund in the world. I'm going to have an RWA offering that blows people's mind, but we're still very early in the curve. So we just need more time for more people to understand this, to push towards this, more infrastructure plays to facilitate these different types of services, which is all starting to happen right now. And the whole of TradFi is excited. BlackRock just launched last week. That's been in the making for probably 2 years. Franklin Templeton, all these big guys. That was a given, right? Because these are real world assets. Those guys were always going to come. That's not the big story. The big story is Coinbase building Project Diamond, real world assets. The crypto guys, INX, like InvestorX, IXSwap, these platforms that are being built on chain for the new world of assets, creating the most innovative, newest investment products the world's ever seen. And people forget that, like, the success that we've seen in the public markets over the years, electronic tracing, replacing chalkboard, had to be inside the exchange to trade, ETF structures, first one a failure in 1989 at 6 million, now $7 trillion asset class. That was all technology marrying a marketplace. That's the simple, pull apart all the parts. That's what happened. Now we've got this opportunity in front of us. The new technology, blockchain, smart contracts. The asset class is like the $15 trillion private markets. So it's the best technology, I think the best, most innovative technology, at least for financial exchange of value or of any value, the best technology we've ever had in the world, with the most illiquid, biggest market that does nothing sitting over here. And what happens when you smash those two things together? You have an explosion of value, which is why we're excited to be doing what we're doing.
Yeah, we're definitely on the same page. As you mentioned earlier, it's not enough to just tokenize for the sake of fractionalizing assets, or in order to, I'm not excited when I see HSBC or doing some blockchain test or whatever, because you're just taking a broker and you're replacing their one back office with another back office. That's not what I came to the stance for. I came to see people like myself, people like my grandmother who loves to invest in Bitcoin for some reason, being able to get an opportunity of wealth creation and preservation that was once the domain of the elite VC investors.
Yep.
And that's why real world asset tokenization and DeFi and the whole interface where we're playing in is so exciting, is because it's not just it's not just an incremental upgrade on existing asset classes. It's a brand new asset class. It's a brand new financial primitives, and it's if we do it correctly, it's geared towards making the lives of other people better and more financially free. So Julian, thank you so much for your time. I'm sure we'll be chatting more. We had a record around 600 listeners in for this time, so a lot of people gotten some value. Just check out, follow Julian, follow myself, INX, InvestX, IXSwap. We're always putting out content. We're always talking about we're always keeping you up to date with the latest and greatest in the real world asset tokenization space, because your financial freedom matters to us, and that's why we build what we build. So thank you, Julian, for your time and your expertise.
Yeah, thanks, David. Thanks, everyone. Sign up, and hope to have you on the journey.